This is Contractor Sense with Ruth King.
Welcome to Contractor Sense. Here you discover ideas, tactics, news, and information that matters to your contracting business and you. I'm your host, Ruth King. This episode is sponsored by HVAC Trust Books. Go to hvactrustbooks.com to discover how this tool can help you close more sales. Thank you for joining us. Here is how we will help your business and you today. Inventory is a bet. You buy materials and equipment and hope that you sell it. Hope is not a strategy. Look in your trucks. Look in your warehouse. How many bad bets have you made? Then, a lot of contractors don't track inventory. I see no inventory on many balance sheets, yet I know that the contractors have some. In this first segment, I will give you some inventory rules of thumb and when you really don't have to have inventory. Right after the break, you'll hear from Jennifer Pierce, who owns Clay's Heating and Air Conditioning with her husband, Clay. Jen will tell you what it was like to put inventory on the balance sheet and track it properly. So let's get started. First, when don't you have to have inventory? I know all of you are thinking, oh, goody, I don't have to have inventory on my balance sheet. I don't have to worry about it, and et cetera, et cetera, et cetera. The only time you don't have to worry about inventory is when you sell a job and the materials you buy go directly to that job. Most of us like to have inventory for convenience. We like inventory on our trucks because it's a lot easier to diagnose a bad condenser fan motor and have the fan motor on your truck rather than having to run to the supply house and get it. So there's some positive things about having inventory, and a lot of times we do it for convenience. Yet, when we do it for convenience, sometimes it gets out of hand, especially with our employees who think, hey, the owner's made of money. He can afford this. So what if I order an extra motor? Or so what if I order an extra relay or a capacitor or whatever? They don't have the same thought processes you have as an owner, so they think that you're made of money, and which hopefully you are, but in most cases, we're not. So where do we go? So when should you have inventory on your balance sheet? Well, guess what? You really should have it from the beginning and when you start your company. It is so much easier to have it done right from the beginning than get to a company that's $1 million or $2 million in size with no inventory on the balance sheet, and then you got to put it on. It's a real pain in the butt at that particular point. So the only way you can grow, if you want to grow past the $1 million size, quite frankly, you've got to have inventory on your balance sheet. It's really a situation where to know proper job costing so that you have proper cash flow and proper control over your material purchases and your inventory purchases, you need to track it. And that means inventory on your balance sheets. Let's take another example, which I see all the time. It's now spring. In some areas, it's almost become summer, if not already. And we have these wonderful spring stocking orders where our suppliers say, if you buy 10 condenser fan motors, I'll give you a great deal on 10. And you think, oh boy, I can't buy 10 condenser fan motors for that price normally, so I think I'll go buy the 10 motors. Even if the motors cost you $2 a piece, which I know they don't, but humor me. So if the motors cost $2 a piece and you buy 10 of them, that's $20. So you put $20 worth of inventory in your warehouse. And yes, it's inventory at that point because you haven't sold the motors yet. Are you going to use them all? So let's assume you use all 10 motors. Then yes, that was a phenomenal deal. However, let's assume you only use 4 of those 10 motors for whatever reason during the summer. And yes, you've got to pay for all 10. You've got 6 condenser fan motors sitting in your inventory on your shelves. That was a bad bet. You're saying, wait a minute, they only cost us $2 a piece. Well, so what? That's $12 that you've wasted. Multiply that by the number of parts and pieces that you have in your warehouse. It comes out to be a lot of money. So if you are going to do a spring stocking order, then make sure that whatever you buy, you're going to be able to use during the time period you have to pay for it. Many distributors and many suppliers offer extended terms for spring stocking orders, and if you can pay for all of the things that you buy, i.e. all of the inventory during that time period, then it's a great deal for you. However, if you've got to pay for all of it and you haven't used all of it, it's not a good deal for you. Another thing to watch out for is inventory and material expense on the same purchase order. Well, what do I mean by that? Think about it. A service technician, or hopefully not a service technician, but your warehouse guy goes to the supply house and he needs to buy 3 motors. One motor is going directly to Mrs. Jones or company A, B, and C, and the other 2 you're buying simply to have on stock or to put it back on the trucks. It goes on one purchase order. Well, if somebody's not paying attention, all 3 motors will get expensed. And that's not a good idea because it screws up your inventory, number one. And number 2, it's not fair to either job costing or the company or Mrs. Jones, because all 3 motors might have gone on Mrs. Jones's job. And when there was only 1 motor that was actually needed for Mrs. Jones's job. So be careful there. Each purchase order should be for one customer and one type of thing. It's perfectly okay to buy materials for stock. Just call it stock. Last thing I want to talk about before the break is this. Let's assume that you actually do put inventory on your balance sheet and you take inventory at the end of the year. Now, inventory on your balance sheet says it's supposed to be, let's say, make it easy, $100,000. When you count it, it only counts to $70,000. That is an additional $30,000 that goes directly against your bottom line, i.e. more expense. Where did that $30,000 go? The question you've got to ask is, did you bill it? Did it get damaged? Did somebody forget to actually put it on an invoice so that it could get billed? All of these things are questions that you have to answer, because where you want to be is if you have $100,000 in inventory on your balance sheet, then you have $100,000 in inventory when you count it. Now, that's an ideal world, and I don't think it's ever happened. However, I've seen $100,000 of inventory, and I've seen $98,000 when counted. That's pretty good. Also, you want to make sure that you don't count what I call materials, consumable materials, things like booties, things like wire nuts, things that cost too much to count. And so I just expense those, and I know that's a bad word right now, but I generally just expense those types of things when you actually purchase them, because they're going to be used over and over again, like screws and like little drops of oil here and there, a little bit of duct tape here and there. So you have to be careful. Don't put consumables because they don't get out of inventory, and make sure that you watch what you count. Finally, I want to tell you a story of a contractor I worked with many years ago who didn't count inventory but let it accumulate on their balance sheet and didn't really pay attention to it. So it took me about 6 months to get them to count their inventory. And when we counted it, it was $250,000 less than what was on their balance sheet. I had a sense and a feeling that this was going to happen because I've watched materials go out the door. Guys took whatever they wanted. They didn't lock up the warehouse, and there were about 30 crews. So you can imagine what happened there. But let's go back to the $250,000. They lost $250,000 of net worth in one day. It's a lot of money. And you think, oh my gosh, how could that potentially happen? Well, $250,000 in 2 years is $125,000 a year. And when you divide that by the weeks and by the number of crews, it came out to less than $4 per crew per day. I can screw up $4 of materials in a day. Anybody can. It's just paying attention. So if you don't want to lose $250,000 of your net worth or something appropriate for your size, pay attention to inventory, count it, and make sure that you go with job cost. Okay, when we get back, you're going to hear the story of Jen Pierce, who actually put inventory on her balance sheet after growing to the point where it absolutely became necessary. So thanks for listening to Contractor Sense. We'll be right back. I've seen my clients' salespeople struggle when a customer asks why they should use your company rather than the competition when your price is higher and you both are proposing the same equipment. I've seen technicians struggle when customers ask them whether they should replace an 18-year-old air conditioner. And most salespeople and technicians never ask the one question that most customers are concerned about, yet never ask. Can I trust you? I found a tool that gives your salespeople and technicians the ammunition to answer this question and more. And the tool works. How do I know? 68% of my clients are using it to increase sales and referrals. What is it? A trust book with your name on it as the author. More details are at hvactrustbooks.com. Warning, there is only one contractor per area that can get these great books. Some areas are already taken. They've gone to my clients. If you want your area and want to have a tool for your salespeople and technicians to increase referrals and sales, then go to hvactrustbooks.com now and reserve your area. I've seen my clients' salespeople struggle when a customer asks why they should use your company rather than the competition when your price is higher and you both are proposing the same equipment. I've seen technicians struggle when customers ask them whether they should replace an 18-year-old air conditioner. And most salespeople and technicians never ask the one question that most customers are concerned about, yet never ask. Can I trust you? I found a tool that gives your salespeople and technicians the ammunition to answer this question and more. And the tool works. How do I know? 68% of my clients are using it to increase sales and referrals. What is it? A trust book with your name on it as the author. More details are at hvactrustbooks.com. Warning, there is only one contractor per area that can get these great books. Some areas are already taken. They've gone to my clients. If you want your area and want to have a tool for your salespeople and technicians to increase referrals and sales, then go to hvactrustbooks.com now and reserve your area. As I promised you before the break, we're going to talk with a contractor who's actually implemented inventory on their balance sheet when it wasn't there. So I'm talking with Jen Pierce. She and her husband Clay own Clay's Climate Control in New Jersey. And in terms of full disclosure, Jen is one of my clients. So Jen, thanks for joining me this afternoon.
Thanks for having me.
My pleasure. All right. So you listened to me and you looked at me kind of crazy in the eyes and say, okay, you got to put inventory on your balance sheet.
Right.
So before we get into that, as you started and grew the business, how did you handle inventory?
Well, we didn't really handle inventory when we started and grew the business. We just bought materials that we needed to use, and we used it. If we had any parts or materials left over, kind of just sat in a store in it, and that's how we handled it.
All right, but there was material in the warehouses that I saw. So what did you do? You just used that as material expense and paid for it as you did it?
Correct. We just expensed all the materials that we bought.
Okay. So you and I had the conversation about putting inventory on the balance sheet, and you decided to listen to me. So how long did it take to put it on the books?
Well, the act of actually putting it on the books was just a matter of counting what we had and putting a value to all of the items that we had and putting that on the balance sheet. That wasn't that difficult. What was more difficult was putting the data to the computer correctly so that the part had a value to it so that it could be tracked properly.
Okay, so that's what took a lot of time. So how long did it take to get all that taken care of?
I'd say counting the inventory and coming up with value probably took a total of 2 days. But inputting the data that we could use the inventory correctly took several weeks, probably about a month. And we're refining that process to this day, which is about 2 years later.
So the question is, are you glad that you did it?
Yes, we are very glad that we did it because our material costs have gone down significantly since we started. We went from about 43% job material costs on our P&L down to this year 7.2% to date.
7.2?
7.2.
Okay, cool. So, and you also have, at least from what I'm seeing, is you have a better track of knowing what's in your warehouse and knowing what real job cost is. Is that correct?
That's exactly right. So we can job cost every single job, install and service to know if we made money and how much.
And now did you have an increase in cash flow as a result of it?
Yes, and our net has consistently increased as a result of it as well.
All right. Now, I didn't ask you this question beforehand, but I'm going to ask it anyway. One of the things that you and I do together is we look at your inventory days, and that is from the time you buy a part to the time you use the part. How many days is it? And yours consistently, even now, still is going down, isn't it?
It is. It is because we're realizing what we use and what we don't use, and only keep what we use and not spending money frivolously on things that we don't use.
So I from what you're saying to me, that the tracking of inventory, number one, is giving you more cash flow. Number two is giving you better job cost control. And number three, you know where you are.
Exactly.
All right, Jen, thanks so much for sharing with us.
Thank you.
And thank you for joining us. Choose one thing that you discovered and implement it in your business. These ideas, tactics, and strategies help you make more money, have more free time, and give back. If you like today's program, spread the word. Help a fellow contractor make more money too. For comments or questions, call me at 770-729-0258 or email ruthking@hvacchannel.tv. Thanks for listening. Have a great and profitable day.